I'm Alan Kenny, Managing Editor with REIT.com, and we're here at the Four Seasons Hotel in Washington, D.C. for the Real Estate Roundtable Fall Meeting. Joining me is Roy March, CEO of Eastdale Secured. Roy, thank you for joining us.
Thank you for having me.
In this kind of investment environment, how would you say that investors' perceptions of real estate have changed?
Well, I think that when you look at it from a global perspective, with alternative returns being as low as they are, as you know, the 10-year bond is trading at or around 2% right now. I think they look at real estate as a very attractive alternative investment to meet the actuarial returns that they ultimately have to accomplish.
And then looking at the capital markets, do you see any signs of life there maybe for CMBS?
Yeah, absolutely. I think, again, what we'll find is that the CIO conundrum, as I call it, is looking for yield. And ultimately, yield is going to come through buying AAA CMBS, buying perhaps even subordinate tranches in CMBS. It's just a matter of having cleared through, in my opinion, the previous commitments that were made. And I think that in September, we were watching very carefully the four large securitizations that were underway to see whether they would clear, whether ultimately the banks would pull the triggers on those things, on those particular offerings. And in fact, we've seen them pull the trigger. Now, unfortunately, they've lost a lot of money, but they are originating. And they're originating at different size levels than they were before, much smaller in terms of the absolute size of the securitization itself or the loan itself. But absolutely unequivocally, it will come back because greed will ultimately take over for fear.
And then how about looking at the market for offerings, both initial public offerings, secondary offerings? Anything you see coming there down the pike?
Yeah, I mean, unfortunately, with the sell-off that also impacted the REITs, there doesn't appear to be any premium in the public markets right now. In fact, the markets are calling for a slight discount to net asset value. Candidly, the public markets have been a harbinger of either good or bad news in the private markets. At the moment, there doesn't seem to be a premium in the public markets, and therefore I don't anticipate that you'll see private companies coming to the public markets because there doesn't seem to be a benefit in it. Obviously, there's an underwriting discount that would occur if you were to come to market, and also ultimately the fees associated with it as well. So I don't see anything in the near term that's going to be an opening for the IPO market. Clearly, as the public companies are trading at either at or at a discount to net asset value, I don't see them accessing the market anytime soon in the equity markets, although we do feel like they'll be accessing the unsecured credit markets pretty frequently in this environment.
And then in closing, one issue that a lot of analysts are starting to have some concerns about would be debt rolling over. Coming up, we've got a lot of maturing debt coming down the pike. How big of a problem is this in your mind? It
is a looming problem, and if you actually look at the statistics, there's probably $1 trillion net of debt maturities versus the traditional origination that's occurred. Having said that, there's a lot of cash on the sidelines, so I believe CMBS will come back and ultimately provide for some of that infill. We think that the commercial banks will come back into the market and provide some of that infill. The life companies have stepped up. We now have mortgage REITs that are in business that weren't in business up until several years ago. And that ultimately, whether it's the banks or the special servicers, we expect that they will work with borrowers to extend those maturities out. We've already seen that in 2009, 2010, and parts of 2011.
All right, well, thank you very much for your time.
Well, thank you. Appreciate it.
For more information on this and other REIT news and analysis, check out REIT.com.